Morning, guys. It's the 16th of December. We are Signal Centre Talking Ball. I'm Joe, joined by Steve. Apologies for those that got caught out on the first attempt at us trying to stream. It's all hopefully up and running now. So please feel free to get involved if you're watching. How you doing this morning, Steve?
Yeah, not bad, thank you. Not bad. I'm a little bit happier today. Broke my crap run on a gun to head, so that made me excited, and I actually took a bit of profit on a trade for. I haven't been able to say that for a while, so
Okay, insight into a trader's life there.
yeah, absolutely.
Okay, great. So let's get stuck into the latest headlines then, because there was some fairly sizable moves again yesterday in the market and a lot of news to digest as well. So the latest headlines are, first up, the ECB hiked interest rates by 50 basis points, taking the overall rate to 2.5%, and this was in line with the consensus forecast. The bank president, Christine Lagarde, stated that the primary inflation at risk is on the upside and that markets should expect a series of 50 basis point hikes for a period of time. She added that the ECB needed to do more on rates than priced in by markets. We also had
Ooh.
yeah, that's not good, is it? The US retail sales dipped yesterday. We saw a decline of 0.6 for November after a 1.3% increase in the previous month, and this was weaker than the consensus forecast of a 0.1% decline. We had some mixed Philly Fed survey data. The manufacturing index improved by minus 13.8 for December from minus 19.4, but this was below the consensus forecast, weaker than the consensus forecast of minus 10. We saw then risk appetite slide pretty much across the board. Global equities retreated sharply with a fresh round of fears that central bank policy tightening will trigger a much sharper downturn in the economy. The S&P index closed down by 2.5%. With other global markets under pressure as well. We saw a interesting move yesterday on the euro. It was unable to hold on to 6-month highs. The euro posted sharp gains after the hawkish ECB rhetoric, posting a 6-month high just below 1.0740. But the dollar index held above the 6-month lows, and the dollar bounced back strongly as equity moved lower and economic fears intensified. We also had a 50 basis point hike from the Bank of England. They took rates overall to 3.5% at the latest policy meeting, which was in line with consensus forecast. There was, however, a split in the votes, with Man voting to increase rates to 3.75%, while others wanted to hold interest rates at 3%. The bank
Man doesn't
indicated
care, does he? Jesus.
no, properly going for it. The others wanted to keep it at 3. The bank indicated that further rate increases are likely to be given the risk of increased domestic inflation pressures, although there was no clear guidance surrounding the scope for rate hikes. And finally, we had a 50 basis point rate hike from the Swiss National Bank. They increased by 50 basis points, taking the overall rate to 1%, again in line with expectations. And Bank Chair Jordan stated that it was too early to sound the all clear on inflation and that further rate increases may be needed. So that was it for the headlines. A fair few for us to digest, and obviously this would have had an impact on the price action of a number of assets. So let's get stuck into those and have a look at what's moving. Steve, do you want to kick us off with crypto?
Yeah, I'm gonna just share my screen. Give me 1 second. Yeah, Man doesn't care. I'd like to know what mortgage he's got.
Probably hasn't got one.
Yeah, probably hasn't. Yeah, power to the people and all that.
Yeah.
Right. Crypto, Bitcoin. That's obviously it's a risk asset now. We know that. This is the daily chart this week. We've got Monday, nice little dip down and buy back, a buy up through the resistance. Very strong move upwards in line with the indices, and then a reversal on Wednesday after the CPI data, and yesterday fell with the markets. So we formed an evening doji star formation. Really nice one, like it. That for me is a bearish topping formation. We broke through the 55 day moving average, but then closed below it. And yeah, looks pretty bearish overall. But we have got a bit of this previous resistance now turns into support. So it's not going to be straightforward for anyone who managed to short it. If people short it, I don't think they do, but yeah, it looks like that's on the back foot this morning going into the trading day. On the 4-hour chart, this is always a good indicator for intraday traders. It gives you a good idea of the trend. The trend is still moving higher. So, but we can see this really weak support below in the form of the Ichimoku cloud. So this is an ideal time for prices to break through the cloud support. Obviously, support starts to build if we maintain prices for a bit longer. So level to watch really on that is around 17,000. That'll be key. If we manage, if prices go below there, then I think that'll open up further downside, maybe an accelerated move downwards. Otherwise, price action really has to sort of like recapture the yesterday's high and the swing high of this move, 18,373. I think my money would be on a break to the downside, but that's just me. You all have different opinions on it, we know. Taking a look at gold on the 4-hour chart, that's looks a little bit toppy. Shooting star formation from Tuesday night at 2 o'clock has capped price action. That's when we saw a break up to 1824. We've got the daily chart showing this double bottom formation with the measured move target up at the 50% fib retracement, 1842 to 44. Looks like we failed to catch that, and we posted a lower low from Monday's prices. So on the back foot again this morning, we got this pivotal level we're approaching, 1765 to 1770. That is quite a key support level now. A break below there opens up another move and a retest of the 1730 to 35, which is a bit more solid support level. Yesterday's bearish engulfing candle after a hanging man candle is negative for silver also. The inverse head and shoulders was targeting a move to 24.92, didn't get there, got up to 24.13 and reversed sharply. So that looks to be a top in place also. Price action to watch, 24.13, obviously the swing high, and it looks like the support coming in around about $22. Copper again capped this time by the 200-day moving average. Again, shooting stars prevalent over the last week or so, and yesterday's bearish engulfing candle broke through this really strong support level that we had, which was previous resistance, turned into support, turned into resistance, turned into support, and we're below there now. So the downside opens up if we do get a break of 373. The level to watch after that is 354, which was a double bottom, which played out really nicely. Let's take a look at crude oil. Bearish candle yesterday after Wednesday's inventories led to further higher price action. It looks a little bit like a hanging man candle, not quite. That the body's ideally the body would be a bit smaller and closer to the top, but it's the same sort of price action. So resistance now coming in at the high of the last 2 days, 77.75 in WTI crude oil, and support really at Wednesday's low. And a break below there should open up the downside, $75. So on the back foot as we're trading this morning, looks like we're going to post a lower low compared to yesterday's. Brent crude oil, different levels obviously, but same sort of price action. 83.10 to 20 is the high. Bearish inside Harami yesterday, and level of support coming in at just above $80. They're the levels to watch there. And finally, natural gas has closed. The gaps have been closed, so we can relax now and really think about where the medium-term price action is moving, and we still remain bearish of this. So we've got the 100-day moving average crossing over, potentially crossing over, with the 200-day moving average. So that's definitely one to look at. Yeah, I think that's me covered here. Let's take a look at the dollar and see which way the dollar is going to push us this trading day, Joe.
Let's take a look then, shall we? So, dollar. We had a decent rally yesterday. We have obviously covered that already in the notes, but if we take a look at the overall structure of the chart, we can see we still have this head and shoulders top pattern, and the rally yesterday was very solid indeed, but is still into this level of resistance and forming lower highs and lower lows. So still confirmed as in a downtrend. Still plenty of work for this to do before we can start thinking that the dollar has formed any kind of short-term bottom. If we start breaking out through these levels and these levels above that we've got, kind of the neckline of the top pattern, as well as a 38.2% fib level on the reverse side, then maybe we can start thinking about higher prices. But for me, it's got a hell of a lot of work to do before we can get to that stage. We mentioned yesterday that any retracement would likely find resistance around 104.77, which indeed it's done. It closed below that level, and we've seen a small gap to the downside on the open today as well. Let's just take a look at the 4-hour and see if we can highlight that. So this is the 1 hour chart I'm looking at here. Let's get rid of these drawings and annotations, and yeah, we can see the gap there on the chart from 10 o'clock to midnight. There is a gap there, so potentially that might be attractive for intraday traders. It's at 104.59. Any sort of move into that level may be attractive for short-term traders with a stop loss above the highs that we posted yesterday, or maybe even above that big dynamic candle lower that we saw yesterday, and targeting maybe a move back to those lows. So from a risk reward perspective, that actually looks pretty nice indeed on an intraday basis. Let's go back to the dailies and take a look at Euro US dollar. As we mentioned there, that had a poke above yesterday, trying to make new highs, 6-month highs, but it rejected and pretty close to a bearish outside day there. So made new highs and closed below the low of below the close and the open of the previous session, not quite below the low of the day. But whichever way you look at it, that is pretty bearish, and it's into a big area of resistance. We had this highlighted on the chart for absolutely ages. And it's done a pretty good job at capping gains for the time being. So it'd be interesting to see what kind of follow-through action we get today, whether or not it's just a minor pullback into local support at 105.95. If we start to break down through the low of yesterday, then that could suggest that we may see a deeper correction, potentially as low as 103.52. Obviously, we've had a very strong move higher, so any kind of pullback is not likely really to be anything too deep, but it will provide opportunities for dip buyers to get back involved. If we take a look at cable, that had a very strong reversal yesterday as well into this resistance level that we'd highlighted on the chart at 124.30. Big engulfing candle, really, much considerably lower than the previous close, and that looks pretty bearish indeed. So we are slightly higher today, and I think any gains from here are likely to be limited to around 123.00, maybe as high as 123.45. But for me, it looks like we could be in the beginning of a corrective move lower. I've got support at 120.28, so any pullback to that kind of level potentially may attract dip buyers. It may be that the dip overextends, maybe back towards this 38.2% fib level. But all in all, that looks like it is ready to turn lower in the very short term. Let's take a look at dollar yen. So that is still trading within this bearish channel. We rallied yesterday into resistance at 137.65, which is highlighted by these lows here, here and here, and then we saw it attacked on the underside, and it's failed to get through that and still remains within that bearish channel. So that indicates that we may see lower prices, and selling into that levels, all those levels that we saw at 137.65 yesterday, would be putting you on the front foot today on your trading account. So still looking for a move lower towards 131.50 on dollar yen. If we close above yesterday's high, then that may invalidate this bearish channel, and we can maybe start looking for higher prices in the very short term. Dollar CAD, see what that's doing there. That had a decent move higher yesterday. Still above the neckline of this head and shoulders top, so I'm not quite giving up on it just yet, but I am losing my patience with it. Let's take a look at dollar Swiss. That broke down yesterday. I think where the interesting moves are probably in some of the riskier currencies like Aussie and New Zealand dollar. So this is the Aussie versus the US dollar. We can see this trading higher in some sort of bullish ascending wedge, but it's broken down to the downside of that and closed below it yesterday, and prices remain below it today. So that could trigger a corrective move lower, maybe to retest the neckline of this inverse head and shoulders all the way down at 65.22. If we take a look at New Zealand dollar, US dollar, that was trading in a bullish channel, and it still is, but it did reject at this 64.68 level. So a pullback maybe towards 62.58 is on the cards. But that was a pretty aggressive reversal that we saw yesterday. So do be careful there. Not sure if we've got any other requests. I know we've got Aussie Swiss, so I'll take a look at that. This is the daily chart, and as we mentioned yesterday, it was trading within a range. And while we were on the video yesterday, we were talking about the Swiss National Bank coming out with their interest rate decision. That happened while we was on the video, and it came in as expected, but there was a lot of volatility that was created as a result. But yesterday we saw a big breakdown of this range at the lower end at 62.87. So that is very bearish. We are now very close to those previous lows that we posted back here on the 13th of October. In fact, we're now trying to close below it. So it could be that we see maybe some profit taking into this level. So if I was short into this move, maybe I think about looking to take some profits off the table here, because we could always get some sort of corrective move to retest the underside of the range before maybe an extended move lower. But certainly this looks bearish. If we are to project where prices could potentially go as a result of the break of this range, then we can do some sort of measurement along these lines, and that would indicate prices moving as low as 61.27. Let's just take a look at the 4 hour to see if there's anything, or sorry, 1 hour, see if there's anything happening. Making new lows, pressing lower. So yeah, it is into a major support. We need to be cognizant of that. But if we get any kind of reversal candles start to form here, any kind of failures at moving lower, or hammer candles forming, then that would probably be your cue to take some profit off the table with that one. Anything else, Steve, you can see on the chats?
No, nothing on the chat. We're all a bit shy this morning.
Yeah, that's no problem at all with me. Steve, let's take a look at some indices, because there was some pretty chunky moves on those yesterday.
Yeah, I'll take a look at. We'll start with Dow. That's always a good one to start with. Let's just jump back to the weekly chart and remember what we were talking about last week. And at the start of this week, I was very bearish because we'd formed this 3 candle formation, an evening doji star formation, or evening doji formation, whatever you want to call it. But this was spooked out. Everyone was spooked out of this after the CPI figure. And but now that we've turned, this week has turned into a really bearish looking shooting star type candle. So that's pretty negative. Weekly, we're looking like we stuck a top in. Obviously, we've seen this on the daily chart, same sort of thing. We broke through the resistance, hanging man here, shooting star here. You could say it's a little bit of a double top, but there's quite a big difference between the highs. Maybe not on a percentage basis. So, it looks like if we take this as a double top, but quite a higher right top, then the neckline was here at 33,400. For me, that was a key support, and we smashed through it yesterday. And we're already pushing down towards the support areas we've got below. So we've got the reverse trend line. That's the one to watch first, 32,780. But also, interestingly enough, we've got the 55-day moving average breaking up through the 100-day, and today breaks up through the 200-day moving average. And the 200-day moving average is sort of like quite flatlining. Now, normally when you get this breaks through it, the 200-day moving average is moving in the opposite direction to the 50-day. When they're moving in the same direction, it's called a golden cross, I think, Joe, is that right? Something like that.
Yeah.
And if it's breaking down from the top going lower, it's called the Death Star. Well, it's not. I just made that up, just like a tribute to Star Wars. But it's something like that. A Death Cross, I think it's called. And yeah, so we're getting that. So this for me is a bit confusing, because over the medium term or longer term, this is quite positive. Let me just let the dogs in. I don't know who let the dogs out, but this looks quite positive over the more medium to longer term. So this always happens when I'm sort of like so bearish about markets, and then all of a sudden you get this conflicting short-term, long-term technicals. I get a bit panicky. But anyway, overall, down on the back foot after a very poor day yesterday, and expect that to continue today. NASDAQ, as I said, come back, NASDAQ. This formed quite a nice double top formation, and we've broken through the neckline. We broke through the neckline previously and then formed another top. So we've got a third arrow we should add to this. This is the double top here. Overall, you could say it's a treble top. It's quite clear the neckline are at the same levels. So breaking through there for me is bearish. That's below the 55, the 100 and 200 day. And they're all, apart from the 55 day, the 100 and 200 are moving lower. So NASDAQ I am more bearish about. So buying US 30 against selling US 100 is probably not a bad play. S&P, that's a bit conflicting, but also it's below the 100 and 200 day moving average, and we've broken through that neckline. And again, it's a bit of a treble top. If we start to sort of like look at that high there, this high here, I mean, yeah, I mean, it's not a clean double top. It's like a rising double top. And yeah, broken through the similar neckline, 3,904, that's key today. If bulls can get back above the 3,904, above that neckline, it does look a little bit more promising because we would have held above the 55-day moving average. But overall, yeah, short term, very negative, but we're going into the weekend. We've had a big sell-off yesterday. Maybe we'll get a little bit of profit taking from them shorts created yesterday. Who knows? The ones to watch, obviously, Asia. We're looking at China opening up again. The Hang Seng, that's in an inverse head and shoulders formation, although we've been capped by a shooting star and the 200-day moving average. So we still have a lot of work to do there. China didn't quite breach the 200-day moving average, the China 50. That's been going sideways. Is it stalling? Inverse head and shoulders saying no, but I wouldn't just trust that one formation. And let's go a little bit more closer to home and look at the FTSE. And the FTSE has really sort of like put a top in now. We've got double resistance above. So we've posted basically lower highs compared to earlier in the year. That's pretty negative for me. We've got the 55, the 100 and the 200-day moving averages to contend with. But at the moment, it's bearish in one way. DAX, big sell-off yesterday. Obviously, that was amplified by the ECB's aggressive or hawkish tone, and we're back below. We're into this vacuum area that I talked about start of the week when I was short. I obviously got stopped out of my short position in DAX. Remember, I got stopped out at the high here, and then got stopped out again over the CPI figure. So, and then it formed a shooting star, obviously, and now it's going lower, and I'm not short, obviously. So anyway, we're sort of on the back foot, moving lower, moving aggressively lower, and I can't see anything stalling that. So my gun to head may be selling one of the indices, but because they've moved so aggressively over the yesterday's price action, it's very difficult to pick a stop level. Maybe I'll go to the other risk asset. Maybe I'll go to Bitcoin and sell that.
Oh, you'll get a few hecklers if you do. Not allowed to sell that.
Yeah, that's true.
But
yeah,
you know,
yeah, it's very difficult.
bad publicity. So
well, yeah, I don't know if some people would agree with that.
yeah, maybe not. Okay, gun to the head trades then. So this is where Steve and I pick trade ideas live on the video. As if we had a gun to our head, what do we trade right now? These ideas are published up to our trading view profile, and each of the ideas that we come up with must have stops and targets and risk reward ratios that are better than 2 to 1. The ideas will expire at 9 p.m. UK time, or when the stops or the targets are reached. That's just for record keeping purposes and making sure that we don't carry any overnight risk. So we can take a look at yesterday's ideas. Firstly, look at my one. I was looking at the swing failure on New Zealand dollar versus Japanese yen. We were trading in a nice bullish channel, which we then broke out of. Then we saw a retest and was looking for lower prices. Pretty choppy stuff in this yesterday, which meant at 9 o'clock I was actually offside by 0.2R on that one, but looks pretty tasty today. And could well go on to reach the target, but I won't be in it. And Steve was selling NASDAQ, which, with all the information that was coming out yesterday, looked as though the indices were on the back foot. And if we click the play button, we can see that it played out very nicely for Steve indeed. coming very close to his actual target. But at 9 o'clock, where it was pretty much at its or close to its lows, he was onside by 1.8 R. So well done to you, Steve. That was a nice win indeed. So I don't know if you've got another one lined up or if you want me to have a go.
I can throw one in there. I'm going to go
I'm
short
ready
of.
if you want me to.
Yeah, you go then.
I'm looking at New Zealand dollar versus the US dollar. So I talked about this on the daily. Let's just go back to that. In fact, look at the weekly. That's an interesting one as well. So we can see here that prices have been moving lower throughout this period, but we've seen a pretty aggressive rally take place. And this candle on the weekly is not a good looking candle at all. Big shooting star into major resistance there. So that is pretty scary, to be honest, and indicates that maybe this corrective rally that we've seen in New Zealand dollar versus the US dollar is potentially over. Just see if there's a fib level that marries up with that. Bang on the 50%. So that looks pretty tasty. On the daily, we can see that it attempted to move higher through these resistance levels here, posted a swing failure into that 50% fib level, and prices have continued to move lower. So I still think there's scope for lower prices within this channel. Looking at the hourly chart, looks like there's a short-term top here, potentially a bearish flag forming as well. So I'm going to sell that at the current price of 63.46. Tight stop at 63.76, and that means I'm going to have to extend my target to make sure the risk reward is ample. So we've got a swing high from back here in November. And it still doesn't give me quite enough. So let's go for a lower target at 62.76. Looking for, well, in fact, let's go with that. Move that back to there. 2.2 R as it stands. So looking for lower prices there on New Zealand dollar versus the US dollar. That will close at 9 o'clock tonight. Unless, of course, it hits its stop or target. So I'll get that published up. Anybody wants to check it out, feel free to do so. Over to you, Steve.
Thanks, Joe. Yeah, so I'm going to sell Bitcoin today, and the reasons for it are weekly chart. We've attempted to break back into the previous support level, now resistance, and failed. We're posting a shooting star currently. Remember, that carries on till Sunday, so there's still a bit of a way to go. The evening star formation formed on the daily chart, bearish. We've had a stall at this will be support level. Let's turn that to blue. And we've reacted higher, but looking to fail on this 4-hour chart because I'm looking at the 15-minute chart. I've had to break it down to 15 minutes, Joe, to get a bearish signal out of here. But we have stalled on the sell-off, reacted higher, broken back above this swing high here, so our high, but we haven't got above this level here, and we've done an evening doji star formation. Not quite a doji, but if you squint really hard or remove some pixelation, it looks like it. So for me, that's bearish, just an excuse to sell Bitcoin. But yeah, we'll put the stop in up. Well, I'll leave the stop there. Obviously, we've got a level down here of support. Let's get the levels. Selling at 17,100 and no, I'm not. That's a profit level. 7,465. I only rounded it up because I like round numbers. Stop is at 7,565. Sorry, 17,565. Am I right? Is that right?
I'll be scared of a few people there. 100 tick stop, yeah?
Yeah. What's wrong with that?
Well, you said it was 7,000, so you had a few people worrying that there was some margin calls.
Right. Okay. And there. No, I'm going to go for 3-1. Not get too greedy with this today. So that's what I'm doing, and it goes on till there. So let's just go through it carefully. Selling at 17,465. Targeting a move to 17,165. The stop is at 17,565. That's fair.
Yeah, very fair.
Yeah, let's go with that.
All right, cool. Okay, we are going to get those both posted up very shortly, so feel free to check them out and see how they do throughout the day. In terms of the day ahead, let's have a look at what we can expect from today. So we've got lots of PMI data out today, starting in 27 minutes. We've got the Eurozone PMI index. After that, we've got the UK PMI index. Then at 2:45 UK time, we've got the US PMI index. So they don't tend to be majorly volatile, maybe sort of 10, 20 pip movements off the back of those in either sterling or euro US dollar. So do be aware of those and keep an eye out for them later in the session. And in terms of data for next week, when's the 20th? That's going to be Tuesday. We've got the Bank of Japan policy decision. So that kind of rounds off the major banks that we've been waiting for on their policy decisions. So it'll be interesting to see what they have planned next week. Okay, I think that's it, Steve.
Brilliant.
Yeah, so have a great weekend, everybody. Hope you've all had a good trading week and the content that we've been providing has been useful. Continue to get involved if you can. We love answering your questions and going through your charts. And until then, everybody, have a great weekend and we will see you on Monday.
Cheers. See you later.
Bye, guys.